Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, March 16th, and we are on the eve of Fed. Great to be with you guys here this morning. Hey, Steve, how's it going on? And everyone in the room. So I'm going to take a quick walk through basically all the majors. Okay, we'll take a look at what the Feds expected to say and what specifically we should be looking for. We'll start off obviously with DXY. We'll hit Euro, Sterling, Aussie, Kiwi, Dollar Yen, Dollar CAD, Gold, SPX. And we'll wrap it up with a quick look at what Bitcoin is doing. So guys, the next 48, 72 hours into the end of the week, there's tons of event risk on tap. Tomorrow you get obviously the Fed, you get core inflation out of Canada, you get GDP growth out of Kiwi, you get Australian employment numbers. The day after into Thursday, you start talking about the BOE, the BOJ, and even into the end of the week. So there's a lot of stuff on tap, a lot of event risk. Obviously, the Fed is paramount and central focus as we head into tomorrow. So before I get into the DXY, I just want to take a quick look. As always, guys, any questions or trade setups, feel free to throw them on the message board at any time. But I wanted to take a quick look at what we're looking for with the Fed. So a quick reference, guys, the summary and the projections will be available here. I'll drop the link for you in the box. Okay. And you'll see it populate right under the March headline there under the calendar. Here's what the previous one looked like, and I kind of went through and I highlighted this already. So as it pertains to growth, this was what we got in December. Remember, that was our last quarterly projection. So not only getting the interest rates, but we're getting the quarterly projections as they pertain to growth, inflation, and employment. The GDP, right? We're expecting this to possibly shift. Remember, this does not include the new stimulus package that just got dished out, the reopening that's happening more or less at different degrees throughout the country. And we're going to see what impact this will have. Okay, now that's going to be obviously secondary to what the rates say, and I'll show you that in a moment. But that's really going to be the main focus here. As far as inflation is concerned, you've heard everyone talking about it. You've seen treasuries at multi-year highs. You've seen even gold with the tank that it took, right? That's coming into an area of interest. So big implications for larger trends and larger trades that we've been seeing. And if we do see that the Fed is in fact calling inflation higher, that would suggest that we need to pay specific focus on the dot plot. And here's what the dot plot looked like last December. So obviously, no Fed officials seeing any moves in 2021. A slight uptick for one of them seeing a move possibly next year. Yeah, that's going to change. I don't think this will be the same setup that we look at tomorrow. And a lot of times these interest rate decisions come out, we already know what's going to be on there, right? We already know they want to keep things easy, keep things lax. The shock from COVID still, running through its course. That said, you're getting a heck of a ton of stimulus. States are starting to reopen, businesses starting to reopen. You're already seeing that economic activity start to pick up. If we just look at today, you see that while retail sales are actually a little bit weaker than expected, you got an upward revision to the previous month, right? So it's going to be interesting to see how the Fed sees this moving forward. And at the end of the day, if we see this start to move higher, if we see that the Fed is looking at inflation as possibly starting to become or starting to show its face here, there's two implications. A, slowdown that you could see in stock markets, which obviously will cover the SPX. That's still holding resistance essentially, or trying to press uptrend resistance. B, it could help the dollar, which has already made the precursor, right, of a nice low here early in the year. And that's trading at resistance. So we want to see how that pans out. And C, what it means for gold. Because if we are going to see inflation start to rear its head, if we are going to see rates possibly start to move higher, It's going to be interesting to see how that filters into gold. So massive week, lots of event risk on tap, huge implications for where we go from here. Here is what the charts look like. So here's DXY, first and primary. Into the start of the week, essentially, we were looking at that pullback, pulling into support. So 311, this was published last week. Into the close. We had come into this big resistance zone on the weekly chart. Here it is. We're still holding just below it. That's the 2018 yearly open, 2016 swing low, 91.92 into 92.28. It's like a 30 pip zone, 40 pip zone of resistance. Haven't closed the weekly close above it. That's still resistance on a weekly basis. 93, just above, starts to look back on that confluence zone of that former trendline support from 2011. Okay, in red there, the primary trend. And downslope resistance for the pitchfork we're following off the highs from, this is the 2017 high. So big level for DXY, right? Really nice basing, came off. We rebounded sharply off the yearly open, broke downtrend resistance into the start of March. Here's where we are now. Okay, now on the daily charts, and you're going to see this on all of these charts, the FOMC lull has begun. Don't expect much over the next 24 hours until we get into tomorrow. You're kind of range bound all over the place. Here's the daily chart. Don't really like it that much, right? This is the breakout. We actually gapped higher and moved right lower, and we're trading right here. So what is that? Is that a breakout of downtrend, or is that a rebound off of uptrend support? Look for a reaction here. Pistol to my head, like roughest case scenario, we do see a spill lower first, right? We get a 38.2, 91.25 maybe. Look for a stronger bounce. But at the end of the day, we're looking for downside exhaustion if DXY is heading higher. Take a look at this on the intraday chart. And this is why it's so important, by the way, guys, for this, for the dollar heading over the next couple of days. Remember, this is like 60% weighted to euro. So as I noted in yesterday's piece, there's some divergences that we're seeing in the dollar crosses. So the dollar is doing its own sort of thing versus each of these majors. And at the end of the day, as far as the DXY is concerned, certainly the risk for a spill lower remains after that turn. Now, some of the majors have already completed 2 equal legs on their correction versus the dollar. So this is where you're seeing the divergence possible tomorrow. Here's what it looks like on the intraday. And here's what it looked like last week. Okay, so we had just turned off of that 236 retracement. We were looking for support right there ahead of the 38.2. Never actually got the drop into the 38.2. That was actually the low, and we've been ranging ever since. This is last week's open, not even this week's open. So you can see how coiled this thing is. Again, if we breach higher, if the weekly opening range tomorrow breaks higher, sure, 92.46, but you're not out of the woods until that breaks. And then again, 93 is that daily target that we were talking about, of a little bit more significance rather on the weekly chart right up here. So keep those levels in view, okay? I'm going to respect an opening range break here, but if we break below 91.24, you're likely to see a bigger spill here. Broader key support is all the way down here. It could be a big spill if 91.24 gives out. So respect the range, stay nimble, keep some powder dry. Definitely let the announcement come out. We get the updated presser and we'll get those questions where Powell will give us a little bit more description, but everyone's going to be digging through the quarterly projections. So this is not going to be your run of the mill interest rate decision, higher, lower, what is their forecast? No. People are going to be digging down deep into the metrics. And again, you know, the Fed has updated, I don't want to get into that, but the Fed has updated their quarterly projections, guys, to include a whole plethora of percentages, central tendencies. Just don't mind that. Mind those 2 charts that I told you as far as the dot plot and the projections for growth. Okay, so that's DXY, number 1. Let's pick up the pace here a little bit. Here's euro. Again, a very boring trade since the beginning of the week. Quick reference for the weekly chart where we are in euro. Here's what euro looked like last week. Big support zone that we talked about was 1835. Now, what I didn't highlight on this chart, I have it on the intraday, is that 1845 is 2 equal legs off the high. So if this whole turn in the euro, which we've really favored since that test of 23.30 and change early in the year, if this whole thing was corrective, it would suggest that that's the low. That's it. So really the onus is on the bears to get this thing below 1835. Resumption would open up basically 117, 116.95 is a basic 38.2 of last year's range. So levels are pretty clean. That's an important support. 120, important resistance. That's a 2018 open, the 618 extension, longer term. That's the range that we're living in for euro. As it pertains to the daily chart, here's what that looked like last week. We had just rebounded off that confluence support. There's that 100. Right? Here was the rebound. Resistance at that 2030 level. It's again that 38.2 of the drop off the yearly high. Key support still right down here at this confluence region, 1835, 1845. Just boring chop fest. Key resistance, key support. Could get another vault into this region before we correct lower, but it's all about whether we break this key region here. Because if we, like I said, if we get below, it would suggest that this is more than just a correction. So all hands on deck. Ideal scenario, again, my humble opinion, pistol to my head. If it rips higher, look to fade a position, or look to fade a move near 2030 if we get it. Here's the intraday chart. Here's what it looked like last week. There was that vault, that break of downtrend resistance. This was the 4-hour chart, mind you. Here's the 2-hour chart. And ever since then, failure ahead of 18 open, and we've just been straddling this 236. Real tight weekly opening range. Again, broader risk is still for a deeper cut below 2030, but that's really your bearish inval. Questions on euro? Okay, so number 3, sterling. As it pertains to the pound, I showed you this guy's last night, and I kind of just wanted to look to see if this was going to give us any merit. So at the end of the day, even when these pitchforks are really short-lived, they can be a tell. So what did we say yesterday? We're looking for support either here or 3807, and 3807 is exactly 100 off the high. So that'd be 2 equal legs, suggest the larger trend still remains weighted to the upside. Here's how it panned out. So the first test here and now is whether we get resistance at this slope. If that comes through, this is going to be null and void, right? We're not going to mind this slope anymore. And we'll be looking for sort of that resumptive move. Weekly open resistance, by the way, comes in right here. So still on the lookout for whether one of these ends up being a little bit more of a pertinent low near term. Breach above 39.94 is what you need to mark sort of the resumptive move there for sterling. Big moves. Let me just take you on a step out here. Here's what sterling looks like on the broader picture. Here's the daily chart. What a reversal off of uptrend resistance just ahead of the lateral level we were looking at, 143. Here's the pullback. We opened the month just below that 39.95 level again, and that's now essentially the monthly opening range highs. So that's your breakout level, period. End of conversation. Ideally, to validate a larger reversal, which is not the base case scenario here in sterling, but let's say it does, you would need to close below 37.43. And then for that, you know, for sterling's part, 100 off of that high would take you down to 135.40. So again, big support. A lot of these trades are doing the same thing. Big support, real tight coiled range here. Even for sterling, the monthly opening range right below resistance. Check this one out this week. Big time. Really important. Any questions on sterling? Remember, you still got the BOE rate decision on tap on Thursday. So you got event risk for both sides on this pair here. All right, so that's sterling. Aussie, number 4. Here is the range. Here's where you start to get into much more range-bound price action, pre-event risk. Very typical. Really quick, I'll take you a step down or a top side down approach here for Aussie. Remember, big resistance, big outside reversal candle that we made into the close of February. Resistance level 78.36 into the 78 handle, still critical. The yearly range lows come in at 75.64. Anything below that, and you're looking for a much larger reversal. Divergence into a trigger break, that's already materialized in momentum, hasn't shown up yet in price. Here's what it looks like on the daily chart. Now, possible downslope in play here. I don't know if there's merits to this yet. I added this yesterday. By the way, I'm sorry, I don't know what's up with Daily FX. For some reason, that webinar just wasn't scheduled. So good that we're on board here, obviously, but that should be on board again starting next week. This is big resistance. I don't know if this pitchfork is in play, but it would suggest again that we want to keep the focus for a topside exhaustion possibly into 78.71. I don't want to see it get that high. So that would mean pushing this here. But with all the event risk on tap, that's sort of the level that would, in my mind, if we push through 78.70, you're looking for a resumption. You're looking for resumption. Otherwise, it's topside exhaustion to this region for the possible move lower. 76.35, key support at this point. Here's what it looks like on the intraday. And again, here's what it looked like last week, or last night rather. Here's your weekly open. Really tight range. Nothing to do here yet, guys. Patience, patience, patience. Things are going to pop tomorrow or the day after or the day after. I mean, you have so much event risk on tap. Australia employment change guy tomorrow. Tomorrow night in New York, Thursday morning in Australia. So the lull continues, and it's very similar picture scenario here in Kiwi. So a little bit cleaner in Kiwi, in my humble opinion. Very tight weekly opening range. Here's what Kiwi looked like last week, or again, yesterday. Keep forgetting my updates here. Here's what it looked like last night. Nothing to change here. Weekly opening range setting up. If this channel is in play, and we did get a third touch in overnight, which kind of suggests to watch it. Again, if dollar drops off, if there's an initial sell-off, 72.38, 73, 72.92 specifically, that would be 2 equal legs off the high. That's former uptrend support turned resistance, and it's current uptrend resistance. So an area of which we'd look for, again, possible failure if we get up there. Below 71.50 is encouraging, all right, for that move lower, but it's 71, 70.93. That's the key support level. That's your yearly opening range lows. Remember on the weekly chart for Kiwi, right? That was a huge region. Resistance on the way up, support on the way down, yearly opening range, and just to add to that, trend slope support off of the May lows from last year. It's 3 points. Real critical region, really critical region. So that's the look here on Kiwi. Any questions on New Zealand dollar? GDP figures also tomorrow night, Thursday morning in New Zealand. Expecting print of 0.5%. Not much of a expectation for volatility there, but do keep that on mind. All right, so a little boring here on Aussie and Kiwi, our favorite, one of our favorite assets. Dollar yen. I also wanted to highlight the abomination yesterday because, man, oh man. So we identified this spot a while ago, last week. Nothing has changed, but I wanted to give you the full suite here, just to show you how critical this zone of resistance is. Here's the weekly chart, guys. This is absolutely massive, massive. Okay, uptrend resistance for the current pitchfork we're following off of last year's low and this year's low. downtrend resistance for the current pitchfork that we've been in from the 2016-2017 highs. Resistance, 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 resistance. Now just higher, if this were to rupture here and pop, you have 109.68, 2019 yearly open, major pivot in price, former swing highs from June, July of last year, and the 50% retracement from the decline off the 2017 highs. Both of those are just higher. So any way you slice it, right? The dollar yen rally is coming to some big levels here, whether it's upslope confluence resistance or that lateral level. At the end of the day, be on the lookout. If you're holding longs, it's a good area to start to clean any up. If you're looking for new exposure, we are stalking possible topside exhaustion. Here's what it looks like on the daily chart. Nice pop, big resistance break there. Upper parallel resistance. Here's another push higher on divergence on the daily chart. It's a weak divergence signal above 70, typically a weak signal, but a divergence signal nonetheless. Just higher. Converges the upslope on that 109.67 level. So you can envision a scenario, even if you do pop higher, you got to get through this on a daily close basis to validate a larger breakout. And remember, what do we always say? A breach of uptrend resistance oftentimes can be the sharpest part of the rally. Here's the last time we broke uptrend resistance. That was confluence downtrend resistance, but you could see the magnitude of the rally. That's what you would expect if we best 109.67 on a closed basis. So what does that mean? In the meantime, you're at risk. The rally's at risk into this zone. Here's what it looks like on the intraday chart. Again, less compelling, but more divergence here as well. Price action pushing into a higher high. The oscillator making a lower high, closer to 50, so a little bit stronger signal. Zoom this down to the 240 chart. You can see a little bit more, but you get the picture. Wouldn't necessarily front run the event risk on tap. Don't forget, we still have the BOJ into the close of the week as well. So I wouldn't necessarily front run it, but the approach here is looking for that reaction around that 109.60 region if we push higher in dollar yen. Ultimately, it would need to be a move below 108. Anything sub 108 would suggest a larger reversal is underhand, and you'd be looking for a deeper correction towards uptrend support. Largely speaking, guys, longer term, I am bullish on this trade. It's just that at this point, again, that uptrend, that push, man, it's tired. It's tired. All right, so that is dollar yen number 6. Loonie, here's dollar CAD. So on the weekly charts, we talked about this level ad nauseum for the last, I don't know, 4 months. It's broken. We got a weekly close below last week, and that's the nail in the coffin. 125, 80 into 126.19. We've talked about this zone since last year, guys. Resistance, resistance, the yearly opening range low. We tested a break of this zone into the close of February. Big outside reversal that closed higher. Man, was that a fake out. Pushed in a couple of days later, and here's the break lower with a close last week, solidifying that major key confluence break. So the next downside target from the weekly chart comes in at 124.21. That's a 2018 low week reversal close. And then an 88.6 of that advance from 2017 gives you 23.58, a little bit lower. The only thing that would put this, back on a constructive path or would suggest this was some sort of massive fake breakdown would be a close back above 26. So outside of that happening, it's a bearish trade, but it's at downtrend support. So while the broader picture here still is bearish, it's very liken this very much so to dollar yen. While we're still constructive on the broader picture, you're at uptrend resistance. While we're still bearish on dollar CAD, we're at downtrend support. Here's what it looks like on the daily chart. So we highlighted 2450 as a soft target. That's the low that we had registered back in the February of the 2018 calendar year. It was a soft target that we've been tracking. We kind of hit that. Here's the last update was on the 14th for dollar CAD. As we were approaching that 2450 level into the start of the week, here's where we are now. I'll show you the intraday chart in a moment. But there's that big break, guys. Here's the move lower. That's your key resistance level. Nothing really else to look at on the weekly chart or on the daily chart. Here's the intraday. And here's the 120. Look there. Bobbled into it. Rallied. Weekly opening range is set. Heading into major event risk. We're sitting unchanged. Here's your weekly open. Pay attention to dollar CAD here. You know what? I do not have this 88.6 on there. So let me just bring this up. There you go. Knew something was off. So guys, just remember that 88.6, it's on the weekly charts. So if you go to the previous update, as I always offer for you guys, remember I alternate the daily and weekly every other update. So if you go back to the weekly charts here, it's right here for you, that level at 23.58 if we do break lower. Questions on Loonie. As far as Loonie is concerned, you're pretty much isolated from any additional event risk from Canada this week. So we'll be mostly focused on the dollar in the days ahead. All right, on to the next one. So last but not least, from that update, which was on the 14th, dollar CAD, gold, and SPX. Here's gold. Here's what it'll look like back into the start of the week, right on Sunday. So the move and the pullback off this zone was beautiful. Uptrend support held. Here's the recovery. You're still at resistance. The 618 extension of the advance. Let me just bring up the chart. Holds into question right here, that 1738 level. That's still resistance. Okay, so here's the 2-hour chart as it stands now. Here's how it looked into the start of the week. We've done nothing except set up a range right into that resistance zone. Okay, big implications for gold tomorrow. Any way you slice it, guys. Anyway, whether you're a fundy guy or a technique guy, this is like basics, right? Gold, you have the inflation risk, and then you have the sentiment risk, right? The risk off, risk on move. Both of those are in play tomorrow as we get the Fed disseminating their expectations for growth, their expectations for rates, their expectations for employment. If we see rates start to move, if we see the dot plot specifically, a big divergence from what they sent out in December, expect a move here. If they see inflation moving higher, expect a move here. Now, specifically directional, inflation, a higher inflation level would be constructive for gold. Higher rates per se would not, right? That's not going to be a black and white. So it's really going to be kind of the market trying to gauge, well, is the Fed basically saying that they're choking up their expectations for zero rates until 2022? Or is the Fed simply saying, well, we actually do see inflation coming up, but we're not changing rates because we think it's 100% transitory or temporary? So there's going to be a lot of, market sort of gyration as they try to interpret what this language means. Again, the presser following the release, guys, is going to be where you're going to get most of those gyrations as you get more questioning and Powell's pressed harder. But it's going to be a big day for gold, no doubt about it. So look, if we break, and the base case scenario, again, here's the daily chart, right? Base case scenario, if we were to break this near-term uptrend, you're looking for that resumptive move. The 100 off the high takes you into 1649. We talked about that a while ago, right? Once 1767 broke, that's been our real next major level. So if we see this downside break, that's sort of the game plan, 1690 and right on, right? You have a soft target at 1671, but we're looking for that bigger drop. On the rally, the only bearish inval, or the bearish inval that I have, on my humble opinion, is right back at 1767. So if this thing breaks higher, sure, you could probably get another push all up to this region, but you're not necessarily out of the woods yet. It's 1767 that would be needed to call the reversal of the broader correction in gold. So man, oh man, big key levels here. Watch gold closely tomorrow, closely. Okay, quick notes. I don't really have a lot here on SPX, but just wanted to show you this chart. It's the same chart I showed you guys last week. I believe so, right? Here it is. The record high was 39.64. That's the level that we were essentially focused on this advance. Here's the push into it, but I just wanted to highlight how this slope has continued to be a little bit, it's been respected, right? Slope support, median line was kind of messy. Nice little pivot there along the 75% parallel, and that's been resistance ever since. Breach from here on a slope standpoint, you're looking for 40-40, 40-35. And break below that swing low from last week, that's what you would need, again, to risk a larger correction in SPX. Big levels, guys. We've been ripping higher for the last 5 days, if you include today. So the markets are all at these major inflections, major pivots, extremes right into this release. All right, so quick look at SPX there. I don't expect that we'll see much ahead of Fed on that front. Last but not least, Bitcoin. A lot of talk on that. Here's the same chart. I didn't change anything. Same chart I showed you guys last week. That pitchfork has continued to hold. Basic low, high, low. Real clean on the upper. Here's the lower parallel support. And last week we highlighted that 618 extension, that high day close. Well, that's the new high day close. The previous high day close was right here. But we stretched right into it, and here's the pullback. Look for reaction here. Break below 50.80, 50,180, in my opinion, would spell larger correction. If the dollar rallies, guys, that's sort of the scenario you could see pan out, is something like this. I don't know that that's a high, and I don't know that this has any merit yet, but what I did stoke this morning is that little touch there, right? So something to pay attention to. I do want to see what Bitcoin does. It's no surprise. This is going to be right on focus this week, specifically with what we're seeing in gold, right? You've heard a lot of, and I've talked about it in this room, the whole discussion about the digital gold essentially being Bitcoin and how people are diversifying outside in the risk manner, the gold trade into Bitcoin. So we'll see. We'll see what kind of push the Fed has on this tomorrow. So guys, that's everything I have on my list. Let me know if you have any last minute questions or trade setups you want to review. If you're bored and the last couple of days have been like kind of pulling teeth, I don't blame you. This is a time where you want to sit on your hands and really just spend some time with the charts, guys. This is not the time to be actively trading. This is the time to be actively planning your trades, because the days ahead are likely to spur a lot of volatility. We want to be A, ready, and B, we want to know where we want to execute on. We want to know what we're looking for as we head into these major events. So if there are no other questions, I'll go ahead and wrap it up there. Steve, Pete, Jay, everyone in the room, always great. Pleasure to be with you guys. I will be back on Thursday. We'll follow the aftermath of the Fed and see what kind of moves that generated. And again, also we'll be looking, don't forget the BOEs on tap on Thursday morning. So for the Sterling's part, we'll definitely be looking to see if we get some more guidance on that trade. Best of luck trading, guys. Stay nimble, and I will see you guys on Thursday. You too, Jay. Have a great day, brother. Cheers.